Here are the 6 key ingredients to success in crypto investing, guys. I want to talk about that. There's no live customer support, guys, in crypto. You are the bank. There's no chargebacks. You make a mistake, there's no asking for a refund. More frequent gaps in the price of, in case you guys are new to crypto or you're watching this at home and you're new to crypto, just know that there's a lot of gaps in cryptocurrency trading and investing, simply because there's not a set tick value like in the stock market or in the regular traditional market. So there's a lot of gaps, especially a lot of short-term gaps, okay? Selling short is not practical or efficient in crypto investing right now, and all the exchanges face the risk of getting hacked. Leon likes to say that it's not if, it's just when. When will the exchange get hacked? Requires some knowledge of computer security skills to be involved in crypto, as inadequate oversight for quality and security compared to stocks. For example, like the exchanges in the past were not required to meet certain government guidelines. Now it is. Like the government is coming down and cracking down on it to force these cryptocurrency exchanges to comply with their laws and their regulations and stuff. So we expect that it's going to be cleaned up. It's going to become more efficient. But keep in mind this, guys, when the exchanges become more efficient, what happens to the potential profit? Right? So the risk is reduced. Guess what happens to the reward?
It's reduced even more.
It's reduced even more, right? So so knowing how to do this and getting in early, I believe that we still have a few years left. We can still take advantage of that, right? That inefficiency in the market. Converting the on-ramp, guys, or gateway into crypto is the biggest hurdle right now for new investors. And we've been saying this for like the last 4 or 5 years, and I don't see it changing. Like it's still a huge issue for people to get into crypto with their US dollars or their euros or their yens or their pounds. Okay, converting your fiat currency into crypto is still a huge challenge, and even worse is storing and securing your cryptocurrencies is still not easy. Lost cryptos are lost. Okay, you send it to the wrong address, it's gone. So you get hacked, it's gone.
Most of the people who bought Bitcoin in 2011, 2010, they don't have their Bitcoins anymore. I mean, even though most of them do not have their Bitcoins, and why don't they have them? Because they lost the keys. You know, this was back when Bitcoin was not worth anything, right? This was when Bitcoin was like it was a cool piece of software where you can send these things called Bitcoins from you to someone else, and they showed up, but they were not worth anything. So people erased them on their hard drive. You know, 3, 4, 5 years is a long time, right? And for something to keep around something that isn't worth anything.
Yeah.
And lack of security.
You guys see those hardware wallets you guys have on your desk?
Yeah, those didn't exist.
Those didn't exist, guys.
Yeah.
When Leon and I got into it, those did not exist. You had to print out a Bitcoin address, like download the software to print your Bitcoin address, and then you had to shut down the internet on your computer, and then you had to print it out on a piece of paper, and then you had to wipe the memory clean to make sure nobody got your private keys and all this stuff. And then we had a friend named James D'Angelo. I was over at his apartment in Boston. He was showing me how to get some dice and roll it so I can get the numbers and generate my own private key without ever touching the internet. So we're sitting here in his apartment in Brookline, and we're sitting here shooting dice so we can figure out how to create he was showing me how to create a Bitcoin private address so that I can create my own address.
And we'll go over why that's secure, because it is all around securing your private keys. But another case is I was in San Francisco at a Bitcoin meetup where somebody was buying Bitcoin back in 2011, 2012, and it would be worth tens of millions of dollars, and he said, oh, it was on Mt. Gox. So they left their coins on exchanges because it was so hard to secure them on your computer. Some people just decided, you know what, I'll just leave it on an exchange.
Yeah.
And like I said, there are no exchanges that are in business anymore that I know of back in the day, starting from when Ty and I first started in crypto. None of those exchanges until Coinbase are around anymore. If you had left your money there, you don't have your money anymore.
Here's some advantages of crypto. So there's no rules and regulations that only favor the rich in crypto. It's a level playing field for everyone. No account size restrictions, no ID requirements, no age restrictions. It's private and confidential. It's pseudonymous. It's not anonymous unless you're using one of the privacy coins. And it's be able to go in between the bid and the ask like the big boys. Now this is important, guys, especially for you guys watching at home, right? And are new to the cryptocurrency market. The bid and the ask, and we'll get into this detail later, but the bid and the ask is basically the price that the people want to sell it for and the price that people want to sell it for and the price that people want to buy it for, right? In the traditional stock markets, right, you usually have a 1 cent between what the people want to buy it for and what the people want to sell it for. It's usually 1 cent. And you can't go any smaller than that. Like you can't put it in order to put in like, I want to buy this stock at 10.5 cents. It's either $10.01 or $10.02 or $9.99. There's no half a penny. But when I was trading stocks, I would see people come in with orders where they would buy or sell things at half a penny. And I'm like, how do you do that? Somebody's doing it because I see it come through the time and sales, the prints. I see that. And I'm always asking, like, how did this guy buy several hundred shares or several thousand shares at $10.50 cents? Like, how do you do that? Because I'm not able to do it on my software. I'm using TradeStation. I'm using Interactive Brokers. I'm not able to do that, right? And in crypto, you can do that. And it's available to everyone. So there's no like only the rich guys can do it or only the big accounts can do it. Everyone is able to go in between the bid and the ask, right? Like the big boys. The other thing too is that in crypto, I haven't seen any evidence of naked shorting like I have in the traditional markets, okay? In the traditional markets, you hear people like Patrick Byrne, the CEO of Overstock.com. He's like hammering Wall Street about the naked shorting. But in crypto, first of all, we don't recommend shorting at this time because the market's not efficient enough for you to do shorting, which is very dangerous, right? And your rewards are limited. Like the most that you're going to make, you know, is not going to be compared, is not anything close to what you can make on the upside. So we don't recommend shorting right now until the market becomes more efficient and the tools for shorting are much better, okay? In crypto, the price closely mirrors the fundamentals. Like if you analyze a project and you constantly follow it and you're up to date with it and you know that they're about to release something that's good news to the market, it actually has value. Okay, like if you really stick to a project and just follow them and you see, hey, they're going to announce this or they've been working on this and they keep announcing it and you know that, hey, they're about to release this new update in 2 weeks or 3 weeks, that actually has value. Whereas in the traditional stock market, if you know that Apple is going to release this, you know, really fantastic new iPhone, that doesn't mean anything. The stock price can go up, the stock price can go down. There's no correlation to the good news and the price going up. Whereas in crypto, we have noticed that if it's genuinely good news, the price actually follows that good news up. And if it's bad news, the price genuinely follows the bad news, right? So it's not like in the traditional markets where it can be good news and the price goes down. It could be bad news and then the price go up. Like there's like, what was that all about, right? So in crypto, we notice that it closer mirrors the fundamentals of that. There's a shorter startup time. From the time that someone wants to trade stocks or invest in stocks, that the amount of time to make that decision to get into it and the time that you actually buy your first shares of stock, there's quite a bit of time there in between. Whereas in crypto, you can do that in a very short period of time. Okay, you can go up there, set up an account with Binance, and they give you access to a limit of up to 2 Bitcoins, and you can start right away. Okay, so no delayed or end-of-day prints. Now, this is something that I really disliked in the traditional stock market, right? Every time I buy and sell something, I have the brokers required to print my transactions to the markets, right? So all of you guys can see that, hey, someone just bought or sold 100 shares of Apple stocks or 100 shares of Microsoft stocks, right? But the big boys on Wall Street, they get to do all their transactions and they don't have to print it until the end of the day. So they might buy 2 or 3 million shares, right? And not have to print it towards the end of the day. It shows up as purple print, right? So that's what's called delayed prints. So the regular, every time you and I buy or sell something, it shows up as red if you sell and green if you buy on the history of that stock. but then you'll see like yellow and purple prints come through, and you're like, hey, who's making those trades? And it comes in, like I used to trade a lot of CLAC. The name of that company is called KL10 right? And they would trade like 4 or 5 million shares a day, and they would trade like 1 or 2 million throughout the day. And then at the end of the day, like during the last half hour before the stock market closes, you'll see millions of shares just rush in, and they're color-coded purple. And you're like, what's going on? Where did all these millions of shares just come in at the last 20, 30 minutes from? So they've been trading it all day, but they don't publish it at the end of the day. And one of the things that they can do is they can say, hey, they're not required to publish it until the transaction is complete, right? Whereas whenever you and I buy or sell the stocks, we have to publish it right away. We're required to publish it right away so the rest of the world can see it, right? I mean, if the institutions or hedge funds are buying several million shares of that stock, I mean, I would like to see that. They get to see mine. I would like to see that. So in the crypto, there's no delayed end-of-day prints like in the stock market. Like whatever goes on, it gets printed right then and there, so everyone gets to see it. You got people that don't know how to put in orders, and you'll see 100 Bitcoins come through, or 1,000 come through, or whatever, right? You can see it right there. There's no hiding it until the end of the day because it trades 24 hours a day. So you can't wait until the end of the day, right before everybody stops trading, and just dump it all on the markets. Okay, so reduce margin rates, okay? Low volume keeps out institutional money. Right now in crypto, the liquidity is not big enough for these people. Like I think Jeremy Gardner, he's the fund manager for a project called Awesome Ventures, right? I'm not promoting it. He didn't pay me to say that, none. I'm just saying this because I saw it on Twitter where he tweeted out that somebody he met wanted like, I don't know, I think it was like several $100 million worth of Bitcoin or $1 billion worth of Bitcoin. I can't remember. But it was a large number. And people were calling him out on BS. Like, oh, you're just full of BS, you know, saying that. And I don't think that in my personal opinion, I don't think he's BSing. I've interviewed him, talked to him online before. Supposedly he's worth like $300 million, right? Because he's one of the founders of the Augur project. He's like in his mid-20s, I think, or late 20s, right, out in San Francisco. The reason why I don't believe that it's BS what he tweeted out is because I have run into other people offline that have asked me, hey, do you know where we can get $8 million worth of Bitcoin? Hey, do you know where we can get X amount of Bitcoins? And they're not like small transactions, guys. They're large transactions, okay? And one of the, recently there was a company that we tried to buy equity in their company. And during that process, they ran into some people and asked us if we can help some people they know buy millions of dollars worth of Bitcoins off the exchange because they didn't want to move the price. So we know that there's a lot of off-exchange trading going on that's a lot bigger volume than a lot of people think. And the reason is it's from hedge funds and institutions that want to buy it, but they don't want to move the price of Bitcoin and disrupt the price of it. Okay? So we think that there's still a lot of money sitting on the sidelines waiting to get in. Okay? So in crypto, you are the bank, so you got to guard everything. No buying or selling outside the money. Now, this is something that's really crazy, guys, if you've never traded stocks before. Okay? So the way the stock market works is that by law, if the public price that's listed on the exchange, let's say someone wants to sell Apple, I'm making up a number here, so it's easy math for me. If somebody is selling Apple stocks at $200 and somebody wants to buy it at, let's say, $100.90, there's a 10-cent difference between the people that want to sell it and the people that want to buy it. That 10-cent difference is called a spread. Okay? Now, in the stock market, you and I cannot jump in between that spread, especially when it's 1 penny. Like I said earlier, like half a penny. And we also can't, like if somebody wants to buy it for $199.90, we can't run over and just sell it to somebody down here that's at a lower price or a higher price, right? You have to buy the guy that's offering it right here. You can't like jump out of that, okay? Likewise, the people that want to sell it, they have to sell it to the prices right here. They can't, like if it's being sold for $200, they can't jump up and sell it to someone for $205 or vice versa on the other side, okay? And in the stock market, I have seen that. I have seen people do that, and I'm like, how are they doing this, right? And those are the funny shenanigans that they should not be doing, but somebody's doing it. I don't know how they're doing it, but I've seen it, right? In the crypto world, there's not, I don't see evidence of that. If it's happening, I don't see evidence of it like I do in the stock market, okay? So, and then in the stock market, if you wanted to buy like $1 million worth of Apple stocks, guess what? I do not know how you would go about doing that. Maybe I'm not a big enough trader when I was in the stock market, but at least in the crypto market, if I wanted to buy or sell $1 million worth of crypto, right? I know that there's places where we can go and do that off the exchange, right, through an OTC trade desk, and we'll talk more about that later, to where you don't disrupt the price, right? So there's ways to go and unload $1 million, $2 million worth of crypto and not disrupt the current price of it, and the market doesn't even see that we just unloaded $2 million worth of that crypto, all right? So we'll go over how to do that so that you guys can see it, all right?
Hey, Ty.
Yes. Can you get the mic? Right here, right here. Here we go. Right?
Nice shot. Wouldn't those transactions off the market show up in the record?
No. There's no law that says that has to show up.
No, he made it in the blockchain.
In the blockchain.
In-
No, I'm not
in the
talking
stock
about,
market or in the
no,
crypto
I'm
market?
talking stock market, in the blockchain.
Yeah, but there's transactions that move on the blockchain all day long. You don't know that came from the exchange or what. Like so if let's say that if I sold you $1 million worth of Bitcoin, people will see the transaction go from one account to the other one, but they don't know that it came from Ty to Rob. And they don't know that that's on the exchange or off the exchange.
That could have been somebody moving money around.
Yeah. There's people that move money around all day long in the Bitcoin world. There's no way for you to tell which ones belong to exchanges and which ones belong to private individuals.
And you'll see that when we show you how
Yeah.
Bitcoin accounts
Oh, I
work.
understand that part. But it would indicate the volume that's moving around, wouldn't it?
Yeah, but when you go to like CoinMarketCap or to most of the coin listing services, when they list how much volume was being traded, they're pulling that data from the exchanges. They're not pulling it from the blockchain explorer, from the ledger, and saying that, hey, this amount of volume went through the ledger today. For that, you have to go to the ledger and look at how much Bitcoins were transacted that day in volume, but you don't know what portion of that, right? Unless you do really deep dive analysis, there's not an easy way that you can look at the volume in the ledger and say that, hey, all this transaction came from the Coinbase exchange, all these transactions came from so-and-so, and this came from these private individuals over here. It's not easy to be able to determine that. So there's no listing service that aggregates the transaction volume from different people. It could be a payment. What if that $1 million is not a trade? It could be a payment for products or services or anything. So there's not really an easy way to be able to distinguish that, right? Somebody else had a question?
So
Yes.
that
Right.
off the exchange trade doesn't affect the price of the crypto whatsoever, simply because it's not on the exchange. There's not a specific exchange rate being set by that on a public venue. When it's off exchange, you don't have any evidence
it's
that there's an
privately
exchange rate.
negotiated.
Yeah,
Yeah.
It's and we'll talk about this and we'll show you guys how we do it so that when the time comes for you guys to do it, you'll know how to negotiate the price and how to make sure that it's fair and if it's realistic or not. So when they quote you the price, you'll know that, hey, that's okay, that's acceptable, right? Obviously, we always want it cheaper when we buy it, right? Just hold on to it, okay? I know you want to launch it like a cannon across the room, but.
Actually, I'm afraid of looking like a sissy.
All right, so let's talk about the 6 key ingredients, guys, here. The first key ingredient that we need to build a profitable trading or investing system in crypto is that we need to have a method to find profitable cryptos. And okay, because there's no way for us to tell that that's going to be profitable. We're just going to give us the highest probability, okay, and potential, all right? So the Bitcoin forums and blogs is one place, and we're going to dive into this deeper, guys. This is just a quick summary before we actually jump into the 6 components, okay? So just be aware of that. So there's Bitcoin forums and blogs. There's individual cryptocurrency forums and blogs, right? There's rating services. Follow recognized crypto investors like the oracles of cryptocurrency like ourselves right here, right? Use the VC man method. Key ingredient number 2 is that we need an investing strategy. So once we find a potentially profitable crypto, what strategy do we use, right? Do we invest in the crypto during the ICO pre-sales? ICO stands for initial coin offering. Do we invest as an accredited investor only sales, right? Do we go and wait until it's on the exchange listed cryptos? Do we do a group buy? A group buy is when this was really popular like in the last 6 months, okay? And this is, we'll go into more details about it, but it's where everybody pools their money in together to go invest into a crypto, and somebody in that group will negotiate a lower rate. Like it may be, during the ICO, it may be, let's say 50 cents, and then somebody will take charge and pool people's money in together and go and
It's like these groups run on like WhatsApp and Telegram, right? There's these chat groups that try to gather investors together, and then one representative goes and negotiates a better price for the group.
Yeah. So, okay, I think it was Tim. You asked earlier in the day, you said, hey, have your strategies changed from 4 or 5 years ago till today? Okay?
Because of the introduction of the Forex, Bitcoin on the Wall Street.
Yeah.
That's right.
So some of the things that we have maintained was like our risk management strategies and techniques. We keep those because we already proved that we've already seen it work on Wall Street in the stock and the futures and the Forex, the options market. Why should we change the risk management, right? We adjusted just slightly to accommodate the inefficiencies in the crypto market, but overall the general thesis of how we manage risk still remains the same, okay? The group buys are something that's like in the crypto space. Like there's no way for us to get together as a room and go, hey, let's pool our money together, let's go and negotiate with the Charles Schwab and we can get all the Apple stocks at a 5% discount or a 10% discount. I don't know how you do that. Like I've never even heard of somebody doing something like that in the stock market, right? But in the crypto market, there are groups of people that do that. We don't participate in those things, and we don't recommend participating.
Some of our colleagues, some of my fellow cryptos,
we've seen many of them do that.
Yes.
We don't do it. The reason why is because we don't focus on strategies that don't scale. Okay? And what I mean by that is that some of these people, they're doing that with like $5,000, $10,000. They pull it. Hey, you put in $5,000, you put in $500, you put in $50, you put in $10,000, right? But there's at a point where, hey, we need to put a larger amount of money in it, and it might not be available. So we can't invest like that. We can't invest knowing that, hey, we're practicing using this strategy, and now we get to a point where we need to put X amount of dollars into it, and it's not available. That strategy doesn't work anymore, right? And that's what we call an arbitrage strategy, meaning that, hey, your goal is to buy it at a 50% discount or a 60% discount, and hopefully when it gets listed on the exchange, you make 50, 60%. And we're not in this to make 50 or 60%. Right? We're in this to make life-changing money. Life-changing money doesn't come from 50 or 60%. You might as well just go back to the stock market and do that, and there's a lot less, there's more control, there's more efficiencies in the stock market. You get to go long and go short, there's opportunities to go long, opportunities to go short. So there's more efficiencies in that if you're just looking for 10, 20, 30, 50%. In here, we're not looking for that, okay? So we have to work on practice on strategies that's actually going to last a long term and scale. And to me, and so last year, during the summer of last year, we got approached by a bunch of people because they know that we've been in the space for a long time, and they believe that by adding us to their group, that it'll increase the volume and they can go negotiate a cheaper rate for the ICOs and stuff like that. And we stayed away from that because it's like, that's like an arbitrage strategy, and we're not here to arbitrage the prices because once the market becomes efficient, that's not a useful strategy anymore. And plus, we predicted that, hey, if our portfolio grows bigger, we're not going to be able to do that anyway. So why waste time goofing around with it, right? And sure enough, it became true. And then there's certain laws that we're not clear about on how when people put money together, we're not clear how the laws work on that in the U.S. And we just rather not mess with it. And we don't have time to deal with that, trying to figure out what the laws are, if it's okay to pool people's money in together and things like that. So we are really cautious about that. There's too much at risk doing that, okay? Now, day trading, the holding period is like less than 24 hours. Swing trading, holding periods like usually a few weeks to a few months. And then position trading is holding periods for a few quarters to a few years. All right? So depending upon what your account size is and what your objective is in the crypto investing world will determine what type of trading we do, and that's what determines it, okay? And what your goals and your account size is. So there's also staking and mining. So we're going to talk a lot about staking, how to earn like on average about 6-7% per year in rewards, up to like 20%, something like Decred. Another reason why we hold on to Decred is because when we stake the Decred tokens, it pays about 20% a year, somewhere around there, roughly 20%. And to me, that's not too bad. Right? It's not too bad. And there's other staking coins that we can stake for and get like 5 to 8% annual returns, rewards on it. And now, notice I said rewards and not interest or not payment, guys. Did you guys notice that? Right? Because you're being rewarded in their tokens. You're not being rewarded in US dollars. So when we say that we get rewarded, somewhere around 20%, that means that we're getting 20% worth of Decred tokens, and then whatever the value of those Decred tokens are, and we go to sell it, that's what the value is. Okay. So just want to make that clear. Okay. And mining, we'll talk about. We're doing some pretty extensive research on mining right now, and I'll get you guys more information on that once we get it. Okay. So key ingredient number 3, guys, is an entry strategy. So once we figure out what's a good, potentially profitable crypto, we decide what strategy we're going to use to apply towards it. And the third key ingredient is where do we get in? At what price do we get in? Do we get in down here, here, or here? Where do we get in? Hopefully, we're not the ones getting in at the top arrow. Okay, we're getting in towards the bottom arrow somewhere around that area. Right? Now, key ingredient number 4. Here again, real quick, guys. Every time I talk about bet size, what do I keep saying? The 2 skills that you need to be a legitimately good trader. One is position size. How much of my money do I put on the line each time I find an opportunity? And how do I capture the big winners when I'm right? Okay? So those are the 2 skills that make someone a trader. Okay? Beginners usually, this is known as bet size. We call it bet size, guys, but on Wall Street, they like to confuse the public by calling it position size. That's the actual technical term for it, okay? I use bet size, Leon uses bet size, just so that you guys, on the streets, we call, hey man, how much are you betting on this crypto that it's gonna work out the way you intended, okay? But on Wall Street, they call it position size, okay? Just so that it's easier to confuse the public, right? So the easier that you can confuse the public, the easier it is that they stay out of the markets, okay? So beginners usually lose money on 2/3 of their trades or investments, and make money on about 1/3 of their trades and investments based on the analysis that I did in looking at different portfolios. That seems to be really common, right? So have a game plan that allows you to take multiple shots. Like you can take a shot at this crypto, you can take a shot the next one, the next one, the next one. And even if you're wrong, it's okay. Okay? Even if it's wrong, it's okay. Your portfolio is still protected. And it's not going to damage your portfolio, but you still have the opportunity to make life-changing profits when you are right on one of them, okay? So the few times that you're right. So amateurs like to focus on winning percentage, guys. Professionals focus on net profit. Now, there's a huge difference here. People who just start out in crypto or in stock trading or forex trading, they want to be able to walk around and brag to everyone that, hey, I was right on this. Hey, I got it right. I called Apple stocks. I was right. I got into Decred. I was right, and I made money. Right? We're not here to be right. I'm going to say that again, guys. We're not here to be right in crypto. We're here to build a system and a process that when we implement all these components of your system, that over the long run, it'll grow your portfolio and yield a net profit. On individual trades, it doesn't really matter if you lose money on 1 or 2 or 3 of them, because if you do it correctly over dozens and dozens and dozens of trades, your portfolio grows naturally. That's the end result and the math of it. And I'll show you guys what it looks like an example of it when we get to the bet size portion. Key ingredient number 5 is an exit strategy. This is hugely important. In addition to finding the profitable cryptocurrencies, I always say this. This is the second most popular question we get asked all the time is when do we sell? So people looking to make a quick buck focus on right picks and entries, thinking that's the key to wealth. Ooh, I just got to find the right crypto. I got to find the right entry price. Once I get in at the right price, it's going to go to the moon and make $1 gazillion, okay? And that's not true, guys. Life-changing profits comes from taking multiple shots, taking multiple attempts, throwing multiple, times at a dartboard, and if you throw enough darts at it, eventually one of them is going to hit the bullseye. And that's what we're aiming for, right? So we're taking small shots, we're taking our portfolio, we're dividing it into small shots, and then we take shots at the crypto market with it. And if we're wrong, the shots are so small that we can afford to be wrong multiple times and it doesn't hurt us. But the one time that we're right and we hit an Ethereum or a Neo or a Stratus or a Cardano or a Decred, guess what it does to our portfolio? Massive. It grows it massively. Just think about it, guys. If I take $100 and I put $1 on each crypto, let's just say that I'm wrong on 90 of them. Is it possible to pick 100 cryptos and be wrong on 90 of them, guys? Yeah, it's possible, but is it likely that you're going to be able to do that? That's very difficult to do.
Even if you were trying.
Even if you were trying. Like a guy told me one time, a statistician, when I was trading stocks in Forex, he told me that it's really difficult for you to make 50 losses in a row trading. And I go, are you kidding me? I'm going to go prove it to you. I looked at him and I go, you're an idiot, right? And I went on purpose and I tried to lose 50 trades in a row. Guess how much I got to? No, it was like, no, it's more than, you can lose more than 3 trades in a row real quickly. It was like 30-something. It was in like the low 30s if I remember it correctly, right? And I couldn't believe it. I was like, I tried to lose 50 trades in a row. Couldn't do it, right? And it dawned on me that, hey, there's certain things that you think in theory can happen easily, but in the real world, it doesn't happen so easily, okay? So don't be afraid to take small shots, okay? Getting out and taking small losses when things go against you, have a method to capture massive profits when things go in your favor, okay? An exit strategy basically answers, when do I get out, okay? Warning, do not get into a crypto if you do not have an exit strategy. Like if you don't know what to do, like you think, hey, if this goes up 10x in your favor and you have no clue what to do, then you may not want to get into it. That's a really bad idea, okay? So one of the things that I respect about working with Leon and David is that when prices run up, they know exactly what to do. Okay, there's no like wishy-washy, should I do this or should I do this? They have a game plan. Hey, when this happens, I'm going to do this. And they say that to themselves as price is running up, and when it does it, they actually execute on it. And that's what separates, earlier guys, in the day I mentioned that the pros will capture about 2/3 of that move, and the amateurs and the beginners, how much of it they capture? Only about 1/3, right? And that's the reason. Both know what to do, but only one of them will actually go do it. Whereas the other one just thinks about it and goes, yeah, I know how it's done, but they actually don't go do it, okay? So key ingredient number 6 is a method to diagnose your crypto portfolio. Usually 2 things that keeps you unprofitable in crypto are something needs improvement or something's missing from your crypto investing system and you don't know it. Something needs to improve and you're not aware which component needs to improve, or something's missing and you have no clue that, hey, this is missing from my investing system and I'm not aware that this is missing, right? So basically what needs to change so you can create life-changing profits in crypto. Here's a summary of the 6 key ingredients, guys, and we'll go into more detail about it in the next few days here. One is a method to find profitable cryptos, an investing strategy once you find it, and then an entry strategy of when do we get in. And then a method to calculate your bet size and an exit strategy once you're in it so that you know in advance, like, okay, when this happens, I'm going to do this. So that when it happens, you're not sitting here running around like a chicken with his head cut off, right? And trying to figure out what's going on. I used to raise chickens when I was young, okay? So my parents used to make me have to be the one that slaughters the chickens, so I know what they look like when you do chop their head off, okay? So a method to diagnose your crypto portfolio, right? Hey guys, when you're growing up poor, man, there's a lot of things you do that's crazy, okay? So these are a method to diagnose your crypto portfolio so that whenever you're not profitable, you know exactly what to pinpoint. Most of the time, guys, the people that are struggling with investing and trading is usually because they don't know what part of their system is not working and they have no clue how to figure it out. And they've never met someone that can look at their system and within a few minutes determine that, hey, this is where it's flawed at, or this is the reason why it's causing you to be unprofitable. Fix this, and this is how it's fixed. Okay? So I'm going to share with you guys how we do that. All right? So these are the 6 key ingredients to creating profits in crypto. We've shared a lot with you guys today, and I want to share with you guys the FUD factor. Okay, this is something I share with all my stock trading students before when I work with them in the stock and the futures and the Forex market, right? Here are some obstacles to learning, guys. I want you guys to consider eliminating these mental barriers to crypto investing success, okay? And this is called FUD, the FUD factor. F stands for fear, U stands for uncertainty, and D stands for doubt, okay? So the FUD factor works like this, guys. The fear that, hey, I'm afraid to lose money in the markets. How many of you guys have that fear? Right? Everybody does. I don't know why you guys don't have that fear. You should. Right? So I'm afraid my family, friends, and coworkers will laugh at me. How many of you guys are afraid of that? Right? We all, I mean, everybody was laughing at me and Leon, right? If you go back through our Facebooks, you can see, ha, 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 oh yeah, we'll print some more Bitcoins. We'll copy and paste and send it to you. All these stupid nonsense in our Facebook comments when we were talking about Bitcoin, you know, for the last 4 or 5 years, right? And then the uncertainty, did I make the right decision to invest in this training and education, right? How many of you guys have that fear or that concern, you know, right? So that's valid, right? Here's another uncertainty. I'm a doctor, I'm an engineer, I'm a business owner, I'm a housewife, so can I actually learn to trade and invest in the crypto market? That's another uncertainty, right? Doubt, does the cryptocurrency investing bootcamp stuff really work? If it's so easy, why doesn't everyone do it? And why are they teaching it to us for? I'm going to share with you guys this picture right here. So in this picture, I'm in the city of St. Pete in the state of Florida. Right here is a parking meter on the right that says $3, $1 per hour, 3-hour limit. You guys see that? So I took my wife down there to St. Pete. We were thinking about buying a place down there, moving down there, because I like the beaches down there are the most beautiful beaches in America. All right. We went down there and we were looking for a place to park so we can grab some lunch. I didn't know how long lunch was going to take. I didn't know how long it was going to take us to walk around the St. Pete Pier and all the places downtown. So I saw it say $1 an hour, 3 hours. So I said, hey, you know what? I'm going to pay for the 3 hours so that I can get the maximum parking time, right? And you guys see this light pole, the signal light right here? So you guys can see that this signal light in that parking meter is not very far. It's like maybe half a block. So my wife and I walk here, we turn left to go towards the St. Pete Pier, to go out into the pier. And right there's a sign that says $3 a day for parking. And my wife looked at me and she said, babe, how come you didn't park here? It's $3 a day. Why did you pay $3 for 3 hours for? And you know what my response to her was? I didn't know. It's that simple, guys. I didn't know. Whenever people say that, hey, if this is so easy, crypto investing, why doesn't everyone do it? It's because they may not know. Like I parked right there and walked half a block, and there was a lower cost parking right there. And I didn't use it because I didn't know. You might hear people talking about Bitcoins every day on CNBC and all over the news and media and stuff. But the reality is not everyone knows what it is. Not everyone got educated like you guys did. Not everyone took the time to educate themselves like you guys are right now. So there's a lot of things that it may sound like, hey, it's so easy. Why doesn't everyone do it? It's because a lot of people don't know. Okay? So that's the answer right there. If you're wondering like why it sounds good, but people are not doing it. I'm sharing this with you guys so that you guys don't let that fear, that uncertainty, that doubt creep into your head, right? And cause you to give up, or cause you to quit, or cause you not to take advantage of this opportunity that we have in the crypto space. So here's some BS, silly myths that don't make you money in crypto. Okay, and I just want to make sure that you guys understand this. Okay, cryptocurrencies are worthless because they're not backed by anything. Okay? What backs gold? Why does it have to be backed by anything, right? Cryptos are a big Ponzi scheme. Oh my God, we got this all the time. In the beginning, back in 2012, 2013, cryptocurrencies is a cryptographic technology. It's a ledger technology. Can it be used inside a Ponzi scheme? Is that possible? Yeah, absolutely. There's a lot of things that people can use inside a Ponzi scheme, but the blockchain technology itself is not a Ponzi scheme. It's just a software technology, right? You can buy drugs and guns with cryptocurrencies. Well, you can do that with the US dollars, the pound, the yen, the euro. I don't think saying that is anything new, right? Bitcoin mining is a waste of electricity. That's, I guess, if you're against electricity consumption, I guess that's a personal opinion. They're going to do it regardless, whether you like it, that Bitcoin is consuming a lot of electricity to secure its network or not. Those miners out there are still going to consume electricity to secure the network, okay? And since we're here about making money, how much electricity they consume is let them be responsible for that, okay? Bitcoin has been hacked. The Bitcoin blockchain and the network has not been hacked recently. But the users who use Bitcoin, there's people that use Bitcoin that they get socially and engineered and hacked quite frequently because they don't maintain the proper security procedures, okay? But the blockchain itself has not been hacked anytime recently since that one that you mentioned where there was a code error, right? And it wasn't because somebody hacked it, it was because there's an error in the code, okay? So the government controls Bitcoin. The only government-controlled cryptocurrency that I know of is the Petro that's being released by the Venezuelan government, right? And I think Donald Trump already signed some kind of decree or some kind of order saying that it's not legal for U.S. people to purchase the Petro cryptocurrency. So I would stay away from that so that we comply with U.S. laws. But that's the only one I know of, okay? Bitcoin is or was created by the CIA and the NSA. I don't have any evidence of it. A lot of people have said that in the last 5 years. We have not seen evidence of that, okay? And cryptocurrencies were created by secret societies. Now, there's a lot of people that understand the Rosicrucians, the Freemasons, and all these other secret societies, right? In my years growing up, I've heard about these secret societies, these secret handshakes, and all these different things, guys. I don't know how you make money off of that. Okay, so I've met Freemasons, I've met people that claim to be Rosicrucians or whatever in these secret societies that only they know. My question is, if it's so secret, why are you telling me? And then the other thing is, okay, let's say it's all true. How do I make money off of that? How does that pay my bills? That's the question I always ask. How does that pay my bills? Okay. My kids' diapers are not free. How does knowing about these secret handshakes or these different societies help pay the bills, right? And people always tell me that, oh, you just don't know. Well, when you figure out how to let me know, and I'll do it if it makes money, okay? Bitcoin is dead. You want to talk about the Bitcoin obituaries?
Oh,
you were making fun about it just a couple of days ago.
Yeah. So the Bitcoin obituaries is this website that goes back 5 years about all the times Bitcoin has been declared dead. And it's still being declared dead.
Yeah.
And
it rises like a phoenix.
It keeps rising. So yes, Bitcoin has died several hundred times already. Has been declared dead several hundred times, and it's still dying. It's still dying.
Right?
Yeah.
So quick reminder, guys, before we wrap it up. In the past, the only way to create life-changing money was to have some kind of connection, personally know the entrepreneur, work at a startup company, or be an accredited investor such as a VC. But today, thanks to the cryptocurrency market, we now have life-changing opportunities in cryptocurrency investing. The little people like us, right on Main Street, now have the opportunities to create life-changing profits like on Wall Street. And more importantly, we now have in my opinion, a level playing field, okay?